especially through the front part of 2026. I think Walmart could be a massive beneficiary there.
Caterpillar's last year was nuts, incredibly strong growth.
In my view, I can see OpenAI actually ceasing to exist in its current form.
This podcast is for educational purposes only and is not intended to be financial product advice or any investment recommendation. Stay tuned for additional disclaimers at the end of the episode. Last year, we put our nuts on the line and it paid off. We picked Tesla, Walmart and Rolls-Royce, and they didn't just deliver, they smashed expectations. So the key point is, can we do it again?
So today we're breaking down our top stocks for 2026. We think these are the companies best positioned to make the most of next year.
From AI leaders to big growth stocks to undervalued opportunities. We're going to cut through the noise, look at the macro data, and use our years of experience to give you our 2026 stocks. Now, we'll use Tesla number one. Tesla, we can't lie and say that we weren't, it a little bit after February.
Everything was hit in February though.
Yeah.
It's one of those things where the tariff bomb just absolutely came out and pretty much every stock got.
And what could we do?
Clad. No, you
not
can't
our
do
fault.
anything there.
Could have been all of everything we picked gone.
Exactly. But I guess then one thing to factor in is how would you manage the risk on that, which is definitely something to consider. But the fact that it's up 10%, yes, it's less than the S&P year to date. However, I still see it as a much longer term.
If we were just trying to outperform the S&P, it's not going to happen on every stock you pick, right?
Yeah, absolutely. You're looking at it from a basket perspective.
Yeah, exactly.
So,
but you'd obviously have needed deep pockets if you were there with that sell-off.
Yeah.
It depends how leveraged you are, which everyone would be through the eyeballs, I'm sure.
Exactly.
And what we were talking about in terms of Tesla was all about the Trump relationship. But actually, you called the fact that this is going to fall apart at one point.
Mm-hmm.
And it did. And I remember thinking you were talking but turns out you were actually right. And when was that? June, summer?
I think it was about March or April. I think Elon and
actually
and
it's
Trump
probably in the
little
downside
fallout.
in this period of shit.
Yeah, they decided to not be friends. So I think they're all right now. But yeah, that was a pretty big change for Tesla and the Trump relationship.
But I think the key thing about Tesla and what we said at the back end of this time last year was that Tesla isn't just cars, right? It's not just EVs. Because actually, Trump had the withdrawn the EV
subsidies.
That's what I'm looking for. He withdrew the EV subsidies. But we were still bullish on this because Tesla isn't EVs. It's Musk, basically, right?
Yeah, definitely. I think there's definitely a cult of personality that surrounds the stock. And with that, it's kind of like that rock star CEO thing. I think I've mentioned it quite a few times previously. He is the epitome of rockstar CEO because he just goes and does what he wants, basically. Yeah. And then makes money.
But Tesla is kind of not just buying Tesla; it's buying Starlink, Grok, X. It's buying the whole lot.
Exactly.
So Tesla's decent, good performance, 10%, and we're not picking it for next year, but I wouldn't be selling it straight away, right?
No, exactly.
So what did perform ridiculously well was Rolls-Royce. Now, this chart is pretty insane. November had a bit of a sell-off, but again, everything had a bit of a sell-off. But, down to big, we've been talking about this recently, but, big support, selling situations, buying areas, whatever they call support and resistance these days. But, dropping down to resistance levels, support levels, jumping higher. But great performance. 94% up on the year.
Well, it's got a nice story to it. I think it's a long-lasting story with the SMRs, so the small modular reactors.
Yeah.
And anything nuclear these days is just getting a bid. But I think the Rolls-Royce getting the UK government contract to actually develop the SMRs for the UK is a massive thing that might be priced in now. They've got, I think, the final decision in 2029.
Yeah.
So there's a nice time frame that you can look at there, but perhaps it's priced in now. We might start seeing the stock turn.
Yeah, and I think with this one, if you were Rolls-Royce, with Tesla, we said there's probably a bit more to come. with this, there could well be loads more to come, but this is a case of not being greedy, right? Here, you could take a 94% out of this for
Exactly.
the
Year to date, that's,
you know,
you know,
I'd say that's fairly decent.
most people would be very, very happy with that. Let's
Yeah,
put it
if you're
that
not
way.
happy with 94%, close your account, go and do something else.
Yeah, pretty much. That's a very, very
So-
good synopsis.
Next was Walmart. Now, Walmart, a little bit more, had like as we were speaking about, February sell-off, always going to happen. But Walmart, since November, middle of November, start of December, it's absolutely flown. But Walmart, we still love, right? You know, this is a good stock. It's done 27% in the year. It remains strong. It's been a good pick. We're still happy with this.
It's an American brand.
Yeah.
You know, it is America.
It is, yeah, exactly.
You know,
What I was
if you
gonna say.
think if you think of a more American company, maybe McDonald's, Coca-Cola, perhaps, but Walmart.
But then they're more international, right? Whereas Walmart
Yeah,
is
exactly.
not, you know.
So Walmart is possibly the most American company on the New York Stock Exchange, in my view. And especially as we're coming into this period whereby people are seeing job losses, you tend to find that consumer staple stocks get a bit of a bid, and Walmart is the ultimate consumer staple stock.
I think we did an episode which was how do you get stocks from your watch list into your portfolio? And we were talking about the fact that, you know, looking at the whole bank statement trade, right? Look at your bank statement. Look at the transactions. Now, if you're in the UK, you're not going to have Walmart, but a similar situation would be, you know, your supermarkets or whatever it may be. You know, a general US consumer is going to have a lot of transactions from Walmart on their bank statement, right?
Pretty much, yeah.
Yeah, so up it goes, performing well. Performing so well that we can actually now get on to our picks for 2026. We're going to continue with Walmart, right? And there's not too much in the way of analysis behind it that's different to last year. You know, it's the similar situation, right?
Yeah, I see it as a, you know, lower beta, so it doesn't move as fast as the S&P 500, while also maintaining revenues. And also, if we look at, you know, as I mentioned previously, the worsening jobs market, I think that consumer staples do get a little bit of a lift, especially through the front part of 2026.
Yeah.
So I think Walmart could be a massive beneficiary there.
Yeah, but and if economies turn down, like if you potentially see it, because that's an underlying risk could be economic power in the US, right? You know, or economy and jobs. But when we say economic power, I don't mean fundamental economic power. We're talking about consumer based. Walmart remains strong. It's it's not one of the consumer staples that drops off your bank statement. Basically, if you've got no money, right? You continue to buy things at Walmart because it's cheap, because it does what it does. Now, okay, margins could be squeezed from that perspective, looking at worst case scenario, but still, it's still got bags and bags of potential. So
Definitely.
we're pretty key on this. Now, Caterpillar's last year was nuts. You know, incredibly strong growth, sell off in February, as we know, but if you were to take this chart further out, this trend continues. Right?
Yep.
It's been like this for 5 years.
In my view, I see this going as a 10, 20-year trend here.
Yeah.
Because I feel like all of the mining, minerals, all of those kind of things are becoming so important.
Yeah.
And Caterpillar is the only company, I believe, who has about 500 autonomous mining trucks ready to go to whichever mines, whichever, drillers or excavators that actually want to be able to get stuff out of the ground. And so they're going to be a massive, massive part of the AI revolution in, metals, you name it, mining generally. So I see them as a real key component of the infrastructure trade.
Yeah. And I think this is key. Caterpillar is one of those that there's a boom continuously, absolutely everywhere. You drive past a building site anywhere in the world, you're going to see Caterpillar products, right?
Yeah,
absolutely anywhere. And the trend speaks for itself. Now, this is our key. I think this is the key one because we've spoken a lot about AI, and rightly because it's the bedrock of financial markets currently. So when we speak about NVIDIA, we speak about chips, we speak about everything else. Now, with Google, this is all about end-to-end, right? Consumer to data center, basically.
Full stack.
That's the words I was looking for. Full stack within AI, right? This is Google have everything set to go.
In my view, I can see OpenAI actually ceasing to exist in its current form. Netscape in the 90s basically got, eaten up by Microsoft because they decided to go and put Internet Explorer on absolutely every Windows device for free.
Yeah.
And
Gemini.
so, exactly. And also, obviously, Google controls data centers, cloud, every single component, even chips now as well.
Yeah.
So,
and you look at a lot of browsers, right, these days. So OpenAI have launched the Atlas, right, the ChatGPT browser. It's just Chrome. They're all just built on Chrome.
Yeah. It's the same with Perplexities as well. Comet. It's pretty much exactly the same.
Yeah. And the skeleton underneath is Chrome.
Yeah.
So it's all built on
they're just copying what works.
Yeah. So the complete full stack is key from that perspective. You know, that is running. So you've got Google, you've got Caterpillar, you've got Walmart, which are three, stalwarts of the markets. People could come out and say, whatever, anyone could pick those. This one we're looking at, this stock we're looking at doesn't make any money.
Yeah, it's got negative 30 to 60 PE, I think I saw over the last couple of weeks.
Doesn't mean we're not picking it, though.
No.
We've got to have something a little bit crazy. And AST SpaceMobile, now what they do, we're in London. This is absolutely, prime for this, that there are complete and utter dead zones of any sort of reception in the centre of London. And this is what this does. AST SpaceMobile, they've got deals with Vodafone, Verizon, AT&T, and they're basically filling the dead zones in mobile phone reception, right? With satellites. Starlink is kind of one of their competitors. Yeah. However, with Starlink, you need whatever it may be, a dish, you need the receiver, everything. This is straight to device.
Yeah.
Right? And this is why this is such a big one, I think.
I think it's innovative.
Yeah.
And, you can look at something maybe 10 years of cash flows ahead or 20 years of cash flows ahead and see, okay, they're probably going to be a big business then. For me, if I were being super, super selective in my own portfolio, I wouldn't touch it because I only buy profitable companies.
Yeah.
So I only buy companies with a positive price to earnings ratio. But look, if you've got a system that suggests, okay, there's momentum behind this.
Momentum being everything, of course.
Exactly. That's what causes things to go up and to the right.
Yeah.
It's just I like to be a little bit more selective sometimes.
Yeah. But so I think if we were being honest, we've got three key ones.
Yeah.
Stalwarts. And then a kind of little bit out of left field if you're not looking to go, with your mainstreams.
Exactly.
And if you're not looking to go with anything else, just buy the S&P.
Yep. That is a relatively easy solution to most people's problems.
2025, we did well. Can we do it in 2026? Do you agree? Do you think we're talking rubbish? Are you just going to buy the S&P? Let us know. Like, comment, subscribe, and we'll see you next time. This podcast is for educational purposes only and is not intended to be financial, product advice, or any investment recommendation. It has been prepared without taking your objectives, financial situation, and needs into account. Any references to past performance and forecasts are not reliable indicators of future results. For more information, visit axi.com.